Okay, we're recording. Very cool. So we're going to start by reviewing the first video. I don't know if I like that music. Skip. Okay.
Today, we are starting the free price action trading and smart money strategies course,
Too loud.
which is a proven way of making consistent. Creates that low. Yes, here it is. So we have to break this one for a stronger.
My timer here. I'm hoping to do this for about 4 hours today. Yeah. Here it is. If you do something for several hours every day, you get pretty good at it. So that's what we're going to do. In theory.
You learn about how to make sniper trading entries with specific price action strategies. Why is this an extremely important entry zone? Because this is where all the market makers and institutional entries happen.
All right, my notes finally loaded.
Supply and demand areas. So you can use sniper trading price action levels from any of those. I will keep
Zoom out a bit.
one of them with example video. The profit order is around 1.5 or 2 R, depending on
All right. What did he say there? Let's bring up a copy of the transcript. If you don't know how to do that, you can click on the 3 dots next to the share, show transcript, and that'll bring it up here. And it'll have timestamps and everything that you can use. And what I like to do is I copy the whole thing. Then I open up Notepad++. And this is the transcript from the first video. We'll just create a new. Okay, where are we in the video? We are at 3 minutes. Find 3 minutes. There we are. Okay, how to enter this trade. You can either use a risky entry with a pin bar and a strong candlestick right after it. Okay, so that's what I wanted. Pin bar and strong candlestick. I'll make a note of that. Just get this mistake. We'll create a new page. Control Enter. Control Enter. Page breaks. Okay. Moving up GIMP. I hope my computer can handle this. GIMP.
I got this question a lot. How do I draw my supply and demand zones? Yes, order blocks are one of the strongest supply and demand areas. Let's find the order block here. When security makes a strong market structure break.
Okay, so he defines an order block as a special supply and demand zone. Let me grab that from the transcript. Do low time frame analysis, define blah blah blah. Pin bar. Bulls are gaining power. I might add that to the notes as well. Oh no! I might tab that over. Stop loss is the bottom of the pin bar. Know that. Wait until the candlestick closes. Make an entry right there. And this is good stuff, because even if you have the theory of identifying a market structure break, getting the exact entry point is difficult without guidance like this. So, okay. He's going to take profit at 1.5 risk or 2 risk, depending on your risk management. Okay, here we go. What is an order block? All this we don't really need. An accumulation of orders. Tab that over. From market makers. Order blocks are one of the strongest supply and demand areas. The last red candlestick before the movement is one of the strongest bullish order blocks. I'll bring the chart back up in a second. And actually, I don't need to take a screenshot of the video because he does offer, let's see if I can find it, a PDF with the slides from his videos. It would be somewhere here. Wow. And when you import a PDF into GIMP, GIMP tends to import it with the layers reversed. So you can go to Layer, Stack, Reverse Layer Order. Of course, then I'll bring my background as the first layer. We'll just drag that down to the bottom. Okay, and it looks like all the layers are a little bit bigger than we want them. So we'll have to scale. Now this chain icon indicates that whatever transformations we make the active layer, will be applied to all the layers that have the chain on enabled. We want to turn the chain off of the background layer because we don't want to scale the background. Shift S, and then Control Shift Shift. Oh, okay. So they are the right scale. They were just offset a little bit. Never mind. Of course, the chain also applies to this kind of movement as well. Okay. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23. Weird, I thought I deleted some layers. Oh, we're missing 2. Okay. Okay, so this is the first slide, and what I'm going to do is I'm going to take what he said from the transcript and then add it to the image so that it's a little bit more informative. It's kind of hard to tell what's going on here without any text or any additional text. And what I'm doing right now is removing this information because it's not really necessary. And when I look back at this as a reference, I don't really need to see that. This is actually very simple. What is an order block? An order block is an accumulation of orders for market makers. Okay, so now that we know what an order block is, we're going to look at an example. And the same thing here, I'm going to remove the unnecessary information. And we don't need to see exact prices to understand what's going on here. I'm going to delete these. And to make this demand order block a little bit more visible, I'm going to add a semi-transparent fill. And I'm going to add in points 1 through 4 that we use to identify market structure break because he doesn't make note of them here except for this arrow. So point 1, identify the lowest low. Oh, we don't want green, we want purple. Point 1, identify the lowest low. Point 2, identify the high that preceded the lowest low. Why is it still green? Okay. Point 2. Now, why did he draw the arrow here? I guess this would be point 2. Point 3 is the break of the previous lower high. And then I think if I remember correctly, the general idea for the entry zone is anywhere below the market structure break at point 2. In the order block down here, the demand order block would be a more precise entry area. Okay, the last red candlestick before the movement is one of the strongest bullish order blocks. So that would be this candlestick here. And when he says before the movement, he's talking about the movement that resulted in the market structure break, which in this case is just this one massive candle. And I'll tell you what I'm going to do. I'm going to try to make this red candle more apparent by adding a fade to the surrounding candle. Okay, and I'm not going to include this slide in my notes because it's just the inverse of the bullish order block, the bearish order block. The same basic concept. So in the event that the market structure break doesn't happen immediately following the lowest low, if there is, consolidation for a while, then only the last red candle before the movement that actually breaks market structure is what we would use as the demand order block. That's definitely worth making a note of. Alright, I'm going to pause the video, get myself a coffee, not alcohol. Need to keep our minds sharp. Okay, I'm back. Restart the timer. So what this slide is saying is that where exactly you place your stop limit order is somewhat subjective. I personally use the body of the candle itself And zone, body is small, also take the wick. Do what you're saying. Small body, taking the wick. Large body, not taking the wick. Okay. I don't think I need to include this slide in my notes, but what I will do is go back and add another bullet point to one of the earlier slides. So the last red candlestick before the movement that results in the market structure break is one of the strongest bullish order blocks. Wow. Sub-note for that. If the body of the candle is small, then the wicks may okay. Just ran out of milk, so it'll be black coffee for the rest of the night. Okay, this is very interesting because I've seen BOS used a lot. So market structure break is the first possible trend reversal point here. US is a continuation of the trend with a new higher high each time. Some traders call MSD as BOS. Don't know what this CHOCH means. Let's go back to the video and see if he mentions it. Or actually, we'll look at the transcript. Okay, so he doesn't actually talk about that in the video, even though he includes it in his notes. Video pause, continue watching. Why does it keep pausing my music? Thanks for confirming. This is worse than Netflix. Okay. Okay, I see what he's saying here. At least I think I do. Every swing point has a micro market structure break in the lower time frame. That makes sense. Because in the lower time frame, it'll, let me get a layer above me. Something like this. Whoa, look at that. So this would be the lowest low. This would be lower high that preceded the lowest low. It would be the market structure break on the low time frame. He's saying, are these quality order blocks? Maybe, maybe not. Depends on whether there's a confluence of other things. So it looks like we might be able to define an order block here, although it wouldn't be as high quality as the one down here. And I don't think I need to include this in my notes because although I don't think it was specifically called an engulfing pattern, this is an engulfing pattern here, but not here. Interesting. Here's another detail about what makes a quality order block is the strong movement upward and why it's important. Is because a strong movement like that suggests very large buyers and sellers, market makers, as opposed to more gradual movements, which could be caused by retail investors. So for these last 10 or so slides, I don't think I need to add anything special to them. I will just copy them over onto a page of the notes in miniature so that I'm at least aware of them if I need to reference them again. All right, let's jump over into the Bitcoin chart and see if we can identify some of these market structure breaks. Do I want to use 30 minutes? Okay. Let's go to yesterday. Or 2 days ago, why not? What am I looking for? Oh, here we go. Higher high, lower low. Actually, I don't need to see this. That. Oh. Oh, look at that. That's good. So this would kind of be the consolidation type market structure break. That's what it turns into. So where would we put the order block? Well, first, let's draw a box. Okay, so I believe this would be the candle used to define the order block. It is pretty narrow. Whoa, what is going on here? Hey, we're coming back down. Oh, look at that. Oh my gosh. All right. What just happened? What is that? Hot damn. 2.4%. All the way down. 3.5% drop. Yeah, so if we would have placed a stop loss at the lowest candle width, horizontal line, yeah, horizontal line, also over array. Yeah, we would have been liquidity hunted. Bam! Would have got us. We'll see what it does next. So I think that kind of validates what I was going for here. We'll just watch it play out a bit longer. Actually, we start to view this as the area of interest. Let's draw some trend lines. I can't make any sense of that. Oh, I'll just forget about it for now. Wow. Okay, so we failed miserably there. Let's see if it's because we didn't look at a higher time frame. So we'll go to the 2-hour time frame. Yeah, look at that. So here we are playing around when this has just happened. What am I looking for? I'm looking for the exchanged volume profile. Is that it? I think we're caught up to real time. Oh, that's where we are right now. Alright, let's go to a random day. Friday the 7th of April. That was a good day, right? I don't remember what I was doing. I bet you don't remember what you were doing either. I almost need to trick myself. Because if I start the replay right here, I've already seen that this is going to happen. So, let me close my eyes. Like 2 days ago. Okay, I'm covering up my eyes. Just got to see where the replay button is. Go there. Okay, go to. Right, there's the replay. There we go. Okay, that should be fair. So this is the 2-hour. Well, let's look at the daily real quick. Yeah, why not? Whoa! That is incredible. I suppose I should be drawing my trend lines in different colors for different time frames. So we can make these pink for salmon. Oh, I see. Even when we went back in time, drawings are still here. So the larger time frame is telling us there's a clear uptrend. We can work with this. What does shift square mean? Can just hold shift? Again, even if this would be maybe a short opportunity, would you really want to bet against the uptrend? Would you? Now, in theory, no, never mind. I was going to say we have an imbalance here, but it's already been filled. This one, though. Not bad. So far. Oh, see, that's so tricky. Oh, never mind. We would have. 86 drawings. That's impressive. That's something I can do to hide the outcome of the replay, is to place myself so far away from where the price could be that if I go back in time, there's no chance that I'll see it unless the chart automatically readjusts. Let's go to first. Look at that. I can't see a thing. That's great. So replay from why don't we work with the 1 hour and 5 minutes? See what we can do there. Oh, it's an alert. I don't remember what it's for, but we don't need it. So, in an uptrend, that's pretty clear. Okay, well, let's make it easy on myself and use the power of hindsight. We know it's going to keep going up. What we're looking for is the market structure break in this area here. This looks like a market structure break. Right? Maybe. Okay. So, consider this a little consolidation, and that would mean order block, as far as I understand it, would be this candle body. Of course, it is absolutely remarkable how, if you were to use something like this area as your stop loss, price just can't help itself but to come up and just tag it. Before doing exactly what you want, this bit right here, and we did see price come up here. Here we go. Look at that. Draw slower. Yeah. Here. Here. And here. Look at that. So maybe that's a liquidity grab. I'm not sure. In any event, we were to enter, were to have entered a short, let me find it. Somewhere in here, we'll say right in the middle. I'll try to time it. Why am I drawing a Fibonacci? I want a short. And it's gone. Okay, there it is. 1-to-1 risk to reward. What is that? 1%. Big, juicy imbalance. Hasn't been filled from this point. It actually goes all the way to the bottom of it. I know, so we're here. There's that fixed volume profile. Fixed range volume profile. That's the only thing that bothers me with this. Where am I? Let's go back to the 5 minute and see if we can find ourselves. All right, here we are. That's what I want. So just to be precise, we'll say we want Friday, April 14th, 2023 at 10:10. Yeah, I don't know where it put me. The go-to feature, very useful. All right. Well, that's 4 hours, so that's as much as I'm going to torture myself with today. Yeah, hopefully I'll be back tomorrow.